U.S. third quarter GDP comes in ahead of estimates at 2.6%, easing recession fears. The Nasdaq slips over 1.5% as tech stocks sell off. The Dow Jones Index closes higher for the fifth straight session. Amazon slips nearly 20% in extended trade after earnings miss estimates, while Apple beats revenue projections despite lower than expected iPhone sales. It's a mixed close for the European markets after the ECB delivers a third consecutive hike, raising rates by 75 basis points. Credit Suisse tanks over 15% after reporting a large loss in the quarter gone by. Asian markets are largely lower ahead of the Bank of Japan's rate decision today. The SGX Nifty, though, indicates a mildly higher start for the Indian market. The RBI's Monetary Policy Committee will hold an unscheduled meeting on the 3rd of November. This after the MPC failed to keep inflation below its 6% mandate for 9 months in a row. The committee will have to explain to the government why it could not curb inflation. And in key earnings to track today, Maruti is expected to post a strong quarter on a low base and demand recovery. Dr. Reddy's is likely to see flat revenue growth on a high base, while Vedanta and Tata Power too will report third quarter numbers later in the day. Hi guys, a very good morning and welcome to Power Breakfast. Those are all of the top headlines that we're tracking for you this morning. I'm Pavitra Parekh, and as always, let's kickstart the show by taking you through everything that's happening as far as the global markets go. For Asia, it's looking like quite a mixed start and no big direction really. You have a few of the markets on your screen. Taiwan is seeing cuts of around 0.5%. You have the Hang Seng, which is absolutely flat right now, slightly in the red. You have Nikkei, Kospi. These are a few of the markets which are opening mildly lower right now. Kospi actually has moved into the green as we speak. So the few markets which are managing to trade in positive territory right now are the Kospi as well as the Straits Times. So the Straits is the one where we're seeing significant gains this morning. It is up over 1%. But for the rest of Asia, the gains and the declines on both sides are not really too significant. So that's what's really happening in the Asian markets. The SGX Nifty is up on your screen. It has moved up a little bit in the past few minutes and is currently around 54 points in the green. So perhaps a positive start for our own markets, but let's see how this session really pans out. That's what's happening in Asia, but let's talk about the US markets. It was an action-packed session. Wall Street ended on a mixed note for a second consecutive day with the Dow Jones up over 190 points. A lot of the industrial capital goods kind of earnings have been good, and that is what is leading the Dow higher. The S&P 500 was down around 23 points, and the tech-heavy Nasdaq is where we're seeing a lot of pain come through because of the tech earnings, and it was down around 1.5%. Speaking of tech, note that bellwether Apple reported a beat in Q3, but it was the weak iPhone sales which really fell short of expectations, and that is what weighed on the stock, and it was down around 4% at the close. CNBC's Sarah Eisen is here with a wrap of all of the action on Wall Street.
Here on Wall Street, a mixed response to the government's report that the economy grew an annualized rate of 2.6% this summer. That follows 2 quarters of declines in gross domestic product. But one-time factors did play a role, leaving many investors still worried about recession. The Dow gained 0.6%, with some help from strong earnings being reported by non-tech companies. The S&P 500 slipped 0.6%, and the Nasdaq got hit the hardest, falling almost 1 2/3%, pushed lower by weak earnings coming from big names in the tech sector. One of those, Facebook parent Meta. 16 months ago, it had a market value of $1 trillion. Now, it doesn't even make the list of the country's 20 most valuable companies. Just today, its market value is down by $80 billion after it reaffirmed plans to spend billions of dollars to create a metaverse, even as profits and revenues fall amid tough competition from TikTok and others. That's the action from the U.S. market. Back to you in Mumbai.
Sarah, thanks a lot for getting us all of that action from the U.S. markets. But staying with Wall Street, the U.S. economy recovered sharply in the third quarter, its first period of positive growth in 2022. So gross domestic product rebounded at 2.6%. This is versus the estimate of 2.3%. Now, a narrowing trade deficit, an increase in consumer spending and government outlays also boosted growth. We have CNBC's Rick Santelli, who's standing by with this report.
First look at third quarter up 2.6%. better than expected. And despite takeaways from inventories and trade deficits, 2.6 is 0.2 better than expected, and definitely better than 0.6 with a minus sign in the rearview mirror. Let's go through it, shall we? On the pricing index, 4.1%. That follows 9%. The high water mark there, well, 9% was, and that takes you back to 1981. So that's a nice fallback. With respect to the pricing issues, we want to continue to pay very close attention. Now, I haven't seen all the other metrics coming through, so let's now jump to durable good orders. Durable good orders expected to be up 0.6, are a bit lagging there, up 0.4. Strip out transportation, and you can see transportation boosted durable goods because they dropped down to 0.5% with a minus sign. Non-defense capital goods, a proxy for capital spending by businesses. Also a very, very big disappointment there. If we look at those orders, they're down 0.7%, and shipments are down 0.5%. Now, finally, we get the rest of the pricing. I see that the core PCE is 4.5%, exactly as expected. In the rearview mirror is 4.7. The high water mark was June of 21 at 6%. So we have definitely come off a bit there. So pricing pressures have eased.
All right, that is a wrap of what happened as far as the US's Q3 GDP numbers go. But with that, let's move on to the final update on our global market wrap this morning. European markets also ended Thursday's trading session mixed, with the French CAC index over 30 points in the red. So that one is up on your screen. The German DAX index was around 15 points higher, and the FTSE closed with a gain of around 17 points. Now, the big cue that really came through from Europe was that though the European Central Bank's third quarter rate hike this year, it did announce a 75 basis points hike, which now takes the deposit rate to 1.5%, which is the highest level that we've seen since 2009. This is bang in line with what was expected as well. In a statement, they also said that it expects to raise interest rates further to ensure the timely return of inflation to the medium-term target of 2%. So let's listen in to what ECB President Christine Lagarde had to say.
We took today's decision and expect to raise interest rates further to ensure the timely return of inflation to our 2% medium-term inflation target following our meeting-by-meeting approach. Inflation remains far too high and will stay above our target for an extended period. Our monetary policy is aimed at reducing support for demand and guarding against the risk of a persistent upward shift in inflation expectations.
All right, that is the ECB president talking about the inflation concern and what the central bank is likely to do with that in mind. But with that, let's move on and take you through all of the cues that you should track as we get into a brand new trading session. We have our research team joining in with the trade setup and all of the individual stocks that could be in the news today. Sonal, Vahishta and Nigel all join me now. Hi guys, a very good morning to all of you. And Sonal, coming across to you first, take us through all of the market cues that we need to watch out for. Of course, we have been discussing the global setup as well.
Oh yes, we have been. And for our own markets, it's of course the November series that starts today. Of course, I'll discuss that in greater detail. As far as the global markets are concerned, mixed cues from the US markets, gains largely led by Dow or Jones. But if we talk about what happened with individual names, Apple was the one which beat street estimates. On the other hand, Amazon saw a big miss, and after trading hours, it was down around 13%. Interesting developments on the Twitter front as well, because now Bloomberg is suggesting that Twitter will be removed from MSCI Global Index with effect from 1st of November. And that is because Elon Musk has closed the deal to take Twitter private for $44 billion. These are just reports as of now. So this will be interesting to watch out for. In terms of what the Asian markets are doing today, we have the Bank of Japan rate decision today, expected to largely remain unchanged. That is the rate of interest this time around. But we are getting largely negative cues from the Asian markets. We have Hang Seng and Taiwanese index both down around 0.3%. However, if we look at the SGX Nifty, that one is indicating that the start for our own markets for the new series could be in the green, up around 60-odd points. As far as European markets are concerned, we were just discussing that ECB has announced a 75 basis points interest rate hike. Apart from that, in the European markets, we saw Credit Suisse that was down 18% after announcing a huge loss in the third quarter. Now about our own markets. November series series has started. In the October series, Nifty was up 919 points. Yesterday, we saw Nifty making an intraday low in the last hour, and in the last half hour itself, we saw swift recovery for Nifty to close in the green. Weakness was seen in the IT index yesterday. That was something that was dragging most of the constituents down. In terms of what the FIIs have done, they have net sold 6,236 crores so far this month itself, while DIIs have net bought 10,997 crore rupees. Now the support is between 17,500 to 17,600, resistance at 17,800 to 17,900, and above that, next level to watch out for will be the recent high that we saw, that is 18,096. So the setup looks in favor of the bulls, at least for today.
All right, set up in favor of the bulls. The SGX Nifty is also indicating that we will get a start around 50 points higher. So let's see how we move from there. With that, let's move on and also talk about the individual stocks that you should be tracking in today's trading session. And Vahishta has that entire list. Good morning, Vahishta.
Good morning, Pavitra. The first is Aditya Birla Sun Life AMC. While the revenues from operations were down 6% on a year-on-year basis, there has been a jump in the consolidated profit of approximately 11%. The quarterly average assets under management were marginally up to 2.93 lakh crores. Moving on to Tata Chemicals, for Q2 of FY23, the revenues were in line with estimates, which grew by 40% on a year-on-year basis. But the EBITDA was up to 84%, which came in at 920 crores, which was lower than the estimates. The operating profit margins were also lower at 21.7 versus the estimated 24.2%. Moving on to SBI Cards, the revolver rate has declined from 45% in Q1 of FY21 all the way to 24% in the past quarter of Q2 of FY23. The NIMs have also been the lowest ever for the company as the revolver rate continues to decline. The market share is also low at 19.1%. For Dhanuka Agritech, the company will be considering a share buyback through the tender route on the 1st of November, which is on coming Tuesday. For Vedanta, the company received the government's approval for the extension of PSC for the Rajasthan gas facility under the pre-NELP extension policy. And the last stock is Infibeam Avenues, which has received RBI's approval for payment aggregator license.
All right, Vahishta, thanks a lot for that entire list. Some big Nifty earnings also expected today, so watch out for Maruti as well as Dr. Reddy's from the Nifty pack. But with that, let's move on and talk about the F&O cues that we should track. And Nigel has all of those for us. Nigel, the start of a new series.
Well, that's right. Start of a new series where you're going to be opening around that 17,800 mark, which in the last few days has been a bit of a hurdle. You know, if you pull up the highs of the last few days, that will clearly state it. You just pull up the intraday chart of the Nifty actually yesterday. You know, bulk of that green that we saw yesterday was because expiry played out. At around 3 p.m., we were down, we were around that 17,700 odd mark. But towards the end, we did see a bit of a spike up. Also, that was part of expiry that will play out, which could possibly, get reversed at some part of the day. Now, at the start of the series, well, the FIs, they're net long this time around. Remember, the start of the October series, they were net short. And evidence suggests that when the FIs are net short, it's not such a bad thing. Just take a look at what happened at the start of October. They were net short on the index and we had a good rally. Even if you look at another data point in July, they were net short. They had only around 15% of their positions on the short side, and you had a good series in there as well. So being net short, the FIs being net short actually gives you a bit of a bounce. Let's see how it plays out. You could argue that in the month of August, well, they were net long on the index and then we had a 3.5% gain. So it'll be interesting to see how November does play out. But 17,800 to around 18,000, that's a bit of a congestion zone. The reason I say is because more than 40 lakh shares were added at both these two strikes. And that's telling you the bears, well, they want to defend this upper level. Support, though, is at around 17,500 to around 17,600. A couple of reasons out there. There was writing seen at around the 17,700 put in trade yesterday. And also the 50 DMA comes in at around that 17,500 odd mark. So the uptrend will continue as long as we hold on to the 50 DMA. But I'm expecting yet again some bit of congestion at around that 17,800, 17,850 odd mark. Back to you.
All right, let's see how that moves and how the trading session really pans out. Nigel, Vahishta, as well as Sonal, thank you all very much for joining us and taking us through the trade setup this morning. With that, it is time for our first short break on the show. But up next, the RBI's Monetary Policy Committee will hold an unscheduled meeting on the 3rd of November after failing to control inflation under the mandated 6% limit. Details coming up for you after this short break. Welcome back. You're still tuned into Power Breakfast. Now, like we told you, the Monetary Policy Committee will hold an unscheduled meeting on the 3rd of November. This comes after the MPC failed to keep inflation below its 6% mandate for 9 months in a row. So the committee will now also have to write a letter to the government explaining why it failed to sort of curtail inflation under this mandate. Lata Venkatesh is here with more details. Lata.
The special meeting called of the Monetary Policy Committee on November 3 seems to be because the Monetary Policy Committee failed to keep inflation under 6% for 3 quarters in a row. It does appear that the meeting will only discuss what response the committee, that is the Reserve Bank, should file to the Government of India. Why we get this is because the announcement from the RBI today clearly says that this meeting has been called under Section 45ZN of the RBI Act. Now, 45ZN of the RBI Act clearly says when the bank fails to meet inflation target, it shall set out in a report to central government, 1, the reasons for the failure to achieve the inflation target, remedial actions proposed to be taken by the bank, and an estimate of the time period within which inflation target will be achieved by implementing the remedial actions. So, considering that today's announcement clearly says Section ZN, the meeting should only discuss what will be the response to the government. There are some people in the market who fear whether the November 3rd meeting will also take some policy action. To me, it looks less likely. It looks like it will only discuss the contents of this letter to government. An additional point, the governor has already made it clear, this letter to government is privileged. RBI will not release it in the public domain. It could be released by the government, we do not know. So at the moment, it's only a guess what the contents of that letter could be, whether, it will indicate whether the government will reply back, what it will reply. All those are still, a grey area. We will have to see how it pans out.
All right, Lata, thanks a lot for getting us all of the details on this meeting, which is going to happen on the 3rd of November. But with that, it's time for a short break on the show. On the other side, we're tracking all of the cues from the commodity market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast, and as promised, let's talk about the commodity space now. Manisha Gupta joins us with an update. Manisha, good morning. It is crude, which is, still holding at those elevated 96 kind of levels.
Oh, yes, and it is headed for a weekly and a monthly gain as well, and a monthly gain is coming in after 4 months of straight losses for the crude oil prices, and a bit of a decline clearly because the dollar index is inched back above 110.5 levels, but the markets are looking at tight supply outlook, record U.S. exports, OPEC and allies' decision to cut output by 2 million barrels per day, escalating Western sanctions on Russian oil. China demand is also picking up, so there is a lot of supportive factors which will keep the crude prices above 95 even as we close this week and this month. But what is not doing so well is the steel prices. We have seen a very sharp cut coming in for that one, trading at around 2-year lows for this one. The steel prices are looking weak as the business activity numbers from Japan, US and European Union have been on the weaker side. And markets are looking at the property and the investment infrastructure sector not picking up in China at all. That continues to weigh on the steel prices today.
All right, Manisha, thanks a lot for bringing us that quick update on the crude prices. But with that, we're out of time on this edition of Power Breakfast. Asia is largely mixed this morning, and it is the SGX Nifty which has moved up a little bit. So it's currently around 60 points in the green. Let's see how the trading session pans out. Thanks a lot for tuning into the show. Bazaar Morning Call is up next.
महाराष्ट्र में ग्रामीण विकास के लिए